Hey guys, I missed doing my stocks to pick in November, so I'm just coming back and going to do a quick little review of how those stocks that I picked in October 2018 are looking now. So I picked them earlier, I think about October 1st, and now it's December 2nd, so just want to give you a quick update. If you don't remember, it was ATT, Tesla, and Alibaba. Given the bloodbath and things that occurred through the month of October and really into November, with the tech stocks really taking big hits with a lot of sell-off, I'm actually pretty happy with where they've ended up to start the month of December. So stay tuned to see where I'm at and to see the picks for December. So as we take a look at these stocks that I had picked as stocks to watch in October of 2018, you can see that it was valued or priced at $33.49, and it's taken a pretty good dip. As you can see, it's now currently at $31.22, so it is coming back on the rise, because it was stuck under 30. If you would have bought around 10.24, you definitely could have gotten a good deal. So it is on the rise, and there is some good news coming out of and coming from AT&T. Headline says, AT&T stock rises as analysts focus on debt reduction. I'm just going to quickly read. AT&T stock gained on Friday as analysts said the telecom and media conglomerate has sufficient cash flow to reduce debt and protect its dividend payments, though weakness in its pay TV business is expected to continue. At an analyst event in New York late Thursday, AT&T said it expects to lower debt with asset sales. AT&T will also use $12 billion in free cash flow in 2019 to pay off debt. Plus, AT&T will dole out $14 billion in dividend payments to shareholders next year. The company is in a good position to deliver and support the dividend over time, and we expect the shares to re-rate as investor confidence is rebuilt, Morgan Stanley analyst Simon Flannery said in a report. So there is some good things, or some good news coming out of AT&T. You can kind of see where this stock has been and where it's going, and it is a stock that I am still going to keep an eye out. And if it would get up to 35, 36, I may be interested in selling, even with the great dividend. Moving on to Alibaba, ticker symbol BABA. When we reviewed this, the stock was listed at about $162, and as you can see, I took another screenshot. The stock hit its lowest point around 10/29 2018 at $133 a share. It has since rebounded. As you can see up top, it is currently valued at $161, and there were some good things coming from Baba. All numbers have been very good. The trade war has definitely had a negative impact on Baba, but this article just kind of showcases what happened this weekend. Dow Jones futures skyrocket after Trump, I don't even know how to say it, XI meeting ends with China trade war ceasefire. So the Dow Jones futures skyrocketed Sunday, along with S&P 500 futures and NASDAQ futures, following a tariff truce at the Trump XI meeting. President Donald Trump and Chinese President on Saturday agreed to halt new tariffs and avoid escalating the China trade war. So these are definitely, this is definitely good news, and I think should have a pretty positive effect tomorrow and onward, especially with the holiday season and everything going on. So Baba is definitely one that I want to keep a look on, and if you were able to get it in the 130s or 140s, I think you got it at a very good buying point. The last stock to review, we looked at it and it was valued at around $310. It did dip big time. You could have bought it on 10.8 for $250 a share. It has since rebounded to $350. Things are looking good, but always with Tesla, you know, something could come out the next day that could completely hurt the stock and really drive its price down. I have been reading that a lot of people expect it to go back under 300. So definitely another one just to keep your eye out for. Some news, Tesla is reportedly making further progress on Model 3 production. Model 3 production ramp has been the primary focus for the electric car maker all year, but after enduring some setbacks and falling behind production targets earlier this year, the company is reportedly finishing 2018 on a much brighter note. Tesla has achieved a production rate for Model 3 of 1,000 units a day, according to a report from Tesla focused blog Electrotech that cites an email from Tesla CEO Elon Musk to employees. So definitely some good news coming out of Tesla, and it'll be interesting to see what does happen here in December, as there are other car companies that are expected to really compete in 2019 and 2020. So definitely be interesting to watch to see how that all plays out. But there is my update from 2018 in October. As I do my 3 stocks to watch for December 2018, I do just want to give a side note that I did get a little bit behind in time, and my technical analysis is not completely the best. But I did want to make sure I got my picks out there. So this first one is Ford Motor Company, ticker symbol F. Now I know a lot of you are not going to be impressed by this because Ford has struggled. Their stock price has gone down significantly over the last year, but they still do have a great dividend at 15 cents per share. This stock is trading at $9.42. It did drop under $9 for a little while, but I do still think it's a good price to buy at, and I think could see this stock going to $11 or $12 in 2019. So they do have some things going for them, I believe, but there's still a lot of people that are not big fans of Ford. Take a look. The Ford Motor Company engages in the manufacture, distribution, and sale of automobiles. It operates through the following segments: automotive and financial services. As far as Ford's concerned, they have announced that they are going to be focusing on the SUV and trucks, as well as the Mustang, but they are going to stop manufacturing their sedans, which I think is a good move. They've also been focusing some of their time and energy on an electric car as well, so they're still staying in that game. You know, everyone's competing with Tesla, so I just still think there's some room for growth, and I think it's exciting to see what they're going to be doing. My second stock is JD.com, ticker symbol JD. Once again, these are stocks to watch. I never say buy something, but JD.com, also known as the Amazon of China. Many people think it's Alibaba, but JD really is designed very similar and operates very similar to Amazon. And I will go in more in depth another time about JD, but it is a stock I have been watching, and I'm going to continue to watch. It's currently trading at $21.17. If you look, you know, earlier like this summer, it was close to $45 a share, so it has really significantly dropped, and I think it's a lot due to them reinvesting in the company. So a lot of their money they're pouring into growth, which I don't think is a bad thing, as long as if you're a long-term investor in JD. But it has dropped drastically, and it's also hurt by the trade war as well that's been going on. Much like Alibaba, JD is a hyper-growth tech giant powered by a rapidly growing e-commerce business. Also, much like Alibaba, the big problem with JD is slowing revenue growth and margin compression against the backdrop of a Chinese economy that is rapidly cooling. Last quarter's 25% revenue growth rate pales in comparison to the year-ago quarter's 40% growth rate, while operating margins are down 90 basis points year to year to a measly 0.5%. So JD, like I said, is really just putting a lot of their money and earnings back into the company, really trying to develop the AI that they have, the systems that they have to really move product efficiently, and I really do think have a bright future ahead of them. The last stock that I am going to watch for December 2018 is StarBucks. This has grown in the last 3 months, as you can see in the chart, immensely. And so at this time of the year as well, with the holiday season, I drive by the local Starbucks. There's constantly cars there. I just don't think any people are stopping, and not drinking Starbucks. And I also think there are some growth potential, even though the one little news might say otherwise. It is trading at $66 right now. One article just to share: earlier in November, Starbucks Corporation is planning to lay off approximately 5% of its global corporate workforce as it seeks to become a more nimble company. The plan comes as the Seattle-based chain struggles to attract new and repeat customers to its U.S. coffee shops amid a highly competitive coffee market. The company on Tuesday said it will lay off 350 employees. That number doesn't include any employees who work in its cafes. In a memo sent to employees on Tuesday, Chief Executive Kevin Johnson said the areas impacted include marketing, creative product, technology, and store development. Employees were being informed of the job cuts on Tuesday, and as I said, that was earlier this month. And so I think the important thing there is that no employees in the cafes are being taken out. I do know that Starbucks is trying to focus more on drive-through. Their growth over in China is focused on delivery. They're actually working with Alibaba, I think, to deliver. And I think Miami has they're doing a trial run of delivery coffee as the whole world tries to, make things even more convenient by delivering things to you so you don't have to leave your house. So I do think that they're, with expansion over in China, I think there's a lot of good things coming to them. Just a little more. In the quarter under review, Starbucks opened 604 net new stores worldwide, bringing the total store count to 29,324 across 78 markets. It plans to build 600 net new stores annually in mainland China, which will double the market's store count to 6,000 across 230 cities from the figure at fiscal 2017. In the fourth quarter, the company opened 139 stores in China. So the stock did drop earlier in 2018, but it did increase the dividend. As you can see, they really are growing over in China. So I think that, I could see more growth for this company, and a lot of that has to do with how they're really trying to make their mark in China. So there you have it. There's my 3 stocks that I'm sharing more information about and kind of giving you a little bit why. I know I didn't go into much detail, but I just wanted to share a little bit about why I am keeping a watch on these 3 stocks. So there you have it. Those are my 3 stocks to watch for December 2018. I currently have small positions in them, and depending on how things go, maybe looking to add to the position to put myself in a better position for the future. So as always, anytime you're investing, you face considerable risk, so be careful. Remember, always seek someone or do your own research to make sure that you're putting your money into an investment that is going to be beneficial to you in the long term. As always, I'm Layman, and these are my terms.